Hey guys, Jimmy Hobson, Vet of VA 5. Today we're going to talk about the VA funding fee. Now I'm actually surprised of all the people I talk to, how few people actually understand, at least their first time, what the VA funding fee is. So let's talk about it. I'm going to use the VA's own words real quick and then we'll talk about it. So the VA funding fee is a one-time payment that the veteran, service member, or survivor pays on a VA-backed or VA direct loan. Okay? This helps to lower the cost of the loan to the U.S. taxpayers because the VA home loan requires zero down payment, obviously in most instances, and of course there's no mortgage insurance. So the funding fee helps offset that. Now let's talk about the ways around the funding fee. If you're active duty and you have a Purple Heart, you can avoid the funding fee, okay? If you're out of the military, okay, and you have a disability rating, you can also avoid the funding fee. So let's talk about what that could mean to you, okay? A VA funding fee up until April 7th of this year, first time use was 2.3%, which gets rolled into the loan amount. So a $100,000 loan, you're going to pay $2,300. Simple math, right? Subsequent use funding fee, same numbers, $100,000 would be 3.6% currently, or $3,600. There's more math to it than that, but I'm giving you a hypothetical. Now, as of April 7th, they've lowered those funding fees. So now the first time use funding fee is 2.15%, okay? And the subsequent use is 3.3%. The great news is also, if you put 5% down, that lowers both those numbers, and 10% down lowers both those numbers even more. So the VA, obviously, they use that money like we talked about to help fund the program and lessen the burden on the taxpayers, but at the same time, there's ways to lessen that to you as well if you put a little money down. Believe it or not, in my experience, about 20% or more veterans put money down in a transaction. Even though it's 100% financing, it does happen. Now, if you're considering a cash-out refinance, there is no discount on the funding fee. So if it's the first time you've used a VA home loan, say you've got a conventional loan and you go to VA, that's considered a cash-out refinance. Your first time doing that, it's going to be 2.3%, and obviously as of April 7th, 2.15%. A subsequent use is going to be 3.3. No matter what your LTV is, those numbers will not change. Now, if you're doing a VA IRRRL, you may have watched other videos talking about an IRRRL, but for reference, it's an interest rate reduction refinance loan. It's basically a VA streamline. If you're doing a VA IRRRL, that funding fee is 0.5% if you don't have a disability waiver. If you do, it doesn't cost you anything in the funding fee. So, we appreciate you watching. If you have questions about the funding fee, reach out to someone that can answer your questions if you don't know what you're looking at. But these will be explained in this video and others about how refinances work, about how the VA home loan program works, and everything involved from A to Z. We look forward to helping you.